Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
It's going well. Happy FFA week to you, Will.
Happy FFA week. This past weekend had some CDE judging things that I was attending to for some FFA competitions, so very exciting stuff there.
Were you a judge?
I was, yep. So I was judging presentations.
Oh, very good. Those are fun.
Yep. It's very neat to see all the different ideas and a lot of creative young minds out there. It's kind of odd, transitioning into more of like you say, that judge versus advisor role for certain groups like that.
Yeah, sure is. I'm sure there's a lot of cool things happening across the countryside this week for FFA week.
For sure. And then speaking of cool things, here in the last couple of days throughout the Midwest, got a lot of snowfall come down. So, you know.
Yeah, we had a little snow here last Friday in Columbia. It didn't last very long.
Nope.
Your ground was pretty warm, turned pretty mushy pretty quick, but we got a couple inches.
Yeah, it's still hanging out here in Ohio, but it's supposed to get up to 47 today, so hopefully it's
Yep.
gone.
Yep.
So anyway, talking about things cooling down, well, I guess that's heating up, but other things that were cooling down, we're seeing the markets continue to fall. March corn down 12 cents at 420. December 24 corn down 8 cents at 462. March soybeans down 8 cents at 11.85. November soybeans down 9 cents at 11.59. That soybean oil contract for March on a cents per pound basis is hanging in at 45.99 cents, up just a little bit there. Soybean meal by the short ton was up 350 per short ton at $350 even. And then the March crop or March wheat crop was down 27 cents at 566, and then April crude oil up 86 cents at 77.97. So Ben, a lot of losses for the main crops there, and then you do see some gains, in areas like the soybean meal. So what's this picture really continuing to say to you?
Well, it's not a great picture for producers when output costs continue to fall and input costs continue to increase. Um, to me, the wheat market there, I think is the most notable. Losing almost a 30 cent, or losing 30 cents a new crop wheat. We continue to see very cheap wheat supplies come onto the global market from competing countries. And then just kind of also a little bit of a bearish outlook, I think, even in domestic use of wheat. Now that we've got corn that's come down pretty sharply and competing in feed bunks for those feed space, right? Like wheat competes with corn and feed bunks. So
Well, and the track down on these market prices, looking at the nearby corn contract, has been pretty remarkable, and it's been pretty steady. Even as we look at what we've seen this past week, we had the day off yesterday for President's Day. If you're watching this on Tuesday, but it's one of those things where there haven't been too many plateaus that have corn has found support. So where might that plateau sit?
certainly lower. I Yeah, so USDA came out this week with their outlook, their first look at 2024, 2025 corn and soybean. Well, really all the crops, but their outlook for 2024. And in the corn and soybean picture, new crop supplies are very bearish and shouldn't be a shock to anybody. Markets, traders, everybody should have been expecting a bearish outlook, and they were bearish. And I think that new crop outlook is really kind of starting to weigh a little bit on our old crop markets as well, to where we have plentiful supplies. There might be some times this summer where supply gets short in some areas of the country, maybe that were affected by drought last year. We see some basis pops, but generally, we're well supplied. We've got a potentially large crop coming again this summer and into the fall, and that's just weighing on markets.
Yeah. Well, and talking about that report and talking about some of the bearish numbers, they were bearish, but not to the extent that maybe traders were expecting pre-report estimates we're looking at. So with that, that almost seemed like a way to maybe add some support back into the market that might not have come as strongly as people were thinking it could.
Potentially, they were still bearish.
Yeah.
Yes, so they were not as bearish as maybe what they could have been, but still bearish. I'll give you one area where maybe the numbers weren't as bearish was corn acreage. Corn acreage came in at 91 million acres. I think you and I have talked before. I've heard a lot of private estimates closer to 92 and a half million acres. I personally was at 90 and a half. So, not too, USDA wasn't too far off from where I'm at for next year. But certainly 91 million acres is more supportive of corn prices than 92 and a half million acres. So that's one area where the numbers could have been worse than what they actually were.
Well, and Ben, just watching that, how the markets could play out in the coming weeks and months, we see this continual track down on prices, but still a struggle to compete on the global market, but maybe not quite as much of a struggle as we would have seen, when we had corn over $5. So where's that balance point? How close are we getting maybe to that point where U.S. grains might become a little bit more competitive on the export market?
Boy, well, you're really looking for me to name a price.
I am.
Yeah, gosh, yeah, I do actually think we're getting closer to that point on corn. I've said this for now 2 weeks, and again, we took another 12 cents off this week on that old crop corn market. I do think we're getting close from the standpoint that we are starting to see some international demand pick up for corn. This last week for the export sales, we sold almost 52 million bushels of corn. That was a 9-week high in the corn market. That signals to me that we're seeing some buyers come back in, even with higher transportation costs due to some reshuffling. That's signaling to me that we've found some international buyers. Ethanol continues to rebound from their low that we saw in January. That signals to me, and ethanol margins remain strong. So that signals to me that we're finding some support there. So I do think there is demand returning in the corn market due to these cheaper prices. One of the challenges that we have in the corn market is there's very few fundamentals supporting the soybean market, and so corn and soybeans compete for acres, and until soybeans find some support, we're going to see this little bearish tint to the corn market. I do think I've said this before and I'll say it again. The trade is getting very short in the corn complex, and at some point, we anticipate, or I anticipate, that sentiment will shift and they'll take profits and buy back into the market and take their profit, or they'll want to hedge their positions by buying back into the market. And so when sentiment does flip, whenever that is, I don't know when that is. Before you ask me that question, I don't know when that is, but there is at least some technical support for a little bit of stability in the corn market. But the problem is we still have a lot of unsold 2023 corn across the countryside that's going to come into the market and really prevent any type of major rally. So while I think we're getting close to maybe some stability in the corn market, at least on the, at least maybe a plateau, as you call it, I don't know if we're going to see a big rally, right? And I certainly don't know if it's going to justify the storage cost to hold that corn in the months to come.
Yeah, well, and just to add on that, Ben, some of the commentary that you've put out there, talking about what managed money is currently doing, that it continues to sell those corn and soybean contracts. So that kind of leads more into the non-expectation that there's going to be an immediate or some type of rally in the near future. So as you see how the managed money is kind of operating there, what does that tell you about the tone and the temperament of the market right now?
Sure, there's just nothing to turn it
Yeah.
bullish, right? Like that's just what there's very little that gets people excited to go long in the corn market.
All right. Well, Ben, as we look forward into this shortened trading week, what should farmers and ranchers really be paying attention to?
Yeah, so as we look ahead, it is a truncated trading week because of the holiday on Monday, so everything's delayed a day. Wednesday, we do get the minutes from the January Federal Reserve meeting. Those sometimes shed light in terms of what the committee members are thinking about. And so I'll be interested to see just how serious they are about interest rate cuts in 2024. The market continues to push the expectations of an interest rate cut back. So that'll come out Wednesday, but I'm not expecting a huge market mover there. And then Friday, we have a couple of reports, cattle on feed for February 1st. We also get those 2023 county level corn, soybean, and grain sorghum yield estimates across the country. And then because of the week, the Commodity Future Trade Commission reports actually will come out next Monday instead of this Friday.
Well, Ben, always good to have your knowledge and information on the program. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out at brownfieldagnews.com. You can also find our sister program, the weekly livestock market update, at brownfieldagnews.com as well. Ben, thanks again. I'm Will Robinson on Brownfield.